Good morning, everyone. This is Holly Hoffman with the Sales Tax Advisory Network. It's 10 a.m. on Tuesday, January 4th. It's first Tuesday of 2022, and this is 10 on Tuesdays. So I'm happy to be back. I took a year off from doing 10 on Tuesdays, and I regret doing that. This is a great opportunity to share sales tax information the same way I learned it when I worked at DOR. The more you hear it, the more you hear the background, the more you're going to understand the terms and get comfortable with it. So my goal is to spend every Tuesday this year with you talking about sales tax and helping you get comfortable with sales tax. And for the next 6 weeks, we are focusing on sales tax specifically for contractors. But in speaking about sales tax for contractors, this really applies to everybody, every business, because there is no business out there that does not hire contractors. Whether you have servicemen come in to do repairs or maintenance, or you're adding an addition or expanding or building a new location. So everyone who hires contractors also needs to understand their liability in whether or not they're paying the proper sales tax to their contractors. So everyone needs to understand this information. So it's a great topic for every business. Plus, your realty improvements and your services and repairs that you have done to your equipment are generally high dollar payments and purchases, and therefore if you make an error on sales or use tax, it can be costly, especially when the audit's a 4-year period. So before I get started, I only have a half an hour with you today, so I don't want to take up too much time, but we are gearing up for our annual Midwest Contractor Sales Tax Conference. It is multi-state. We have Wisconsin, Michigan, and Illinois Department of Revenues coming. We have the current and former executive directors of the Streamlined Sales Tax Governing Board who are going to be speaking, Avalara, Ryan Consulting, and of course I'll be speaking. We have other speakers. We have Gilbert Brown and Santana Dotson are going to be with us all 2 days of the event to hang out with you, get to know you. They're going to be raising funds for the Gilbert Brown Foundation. It's not going to be your typical sales tax conference. It's going to be fun. I hired a great production crew who are going to be doing the videography and managing our virtual seminar, and it's going to be not a typical Zoom conference. So I strongly encourage you, if you can't travel down to Beloit for the 15th and 16th, join online, and you will be able to also participate in the auction and raffles when you're online. So everyone gets to have fun and enjoy, and it's going to be great information. So I was thinking about what to talk about today, and I really want to focus on real versus personal property and digging into that. And if we don't finish today, this will be our topic again next week, Tuesday. So everyone, I don't want to say everyone, most of my clients get annoyed with me talking about real and personal property, and they say, why do you keep saying real and personal property? That doesn't mean anything to me. I wish you'd stop using that. Just tell us if it's taxable or non-taxable. And this is two of those terms that I really want people to get comfortable with, because there is no other way to mentally compartmentalize whether something's taxable or non-taxable, the treatment of it, and how it fits in the sales tax law without using those terms, because those are the two buckets that sales tax terminology fits all of your activities in. It's either real property or it's tangible personal property and services. So you'll understand why, but when the tax treatment is based off of those two terms, and when you see the mix within those two buckets, it's important to use those terms because there's no other definition or way to mentally understand what the tax treatment is and where your items fall, what you're doing on your invoice, what service you're providing, or what sale you're making. So I'm going to continue to use real and personal property, and I want to get you comfortable with what those mean. So before I jump into that, I just want to briefly remind you, generally for sales tax in Wisconsin, what is taxable? And there's a list of things of what is taxable. So if you make a sale of these things, they would be subject to sales tax. So tangible personal property, of course, is one big category. We have certain coins or stamps. Those are items that are like collectors, probably not anything you're going to deal with. I highlighted in yellow. Oh, by the way, just to explain, you can listen in. You don't have to watch the slides, but these will be recorded and made available to you. So if after today's session you want to go back and rewatch the program and look at the slides and think more about it, you can do so, and that's why I have the slides to help. Plus it guides me. I'd be way off topic if I didn't have my slides. But so if you want to not watch the slides and just listen today, that's fine too. Take it in. So certain coins or stamps, I highlighted in yellow the items that really pertain to contractors. So of course, sales of tangible personal property, that's something you would be doing. Certain lease tangible personal property affixed to real property, and we'll talk about that. And this is another situation where you have your two buckets. And when we talk about the definition of real property, there's certain things in there that you'll think, oh, that's real property, or oh, that's tangible personal property. But this is why we have the two buckets and what DOR considers it according to tax law. I shouldn't say DOR, according to tax law. So certain lease tangible personal property affixed to real property is going to be still taxable. Certain digital goods, and there are digital goods that do apply to contractors, like online plan rooms, things like that, is a digital good and would be taxable. Specified services. So DOR has a few exceptions in the tax law that just identifies certain activities as taxable. They're deemed to be taxable. So service to tangible personal property is deemed to be taxable. And service includes repair, painting, coating, towing, maintenance, all of that, cleaning, all counts as service. So when I talk service, that includes a lot of things. Landscaping is deemed taxable. And this is one that gets confusing. I was just speaking with an excavator the other day who is confused about landscaping versus excavating because they don't consider themselves an excavator or a landscaper. They do excavating, but a certain portion of their work is deemed to be landscaping. So this is where you need to identify and be familiar with what tax law defines things as. So landscaping generally pertains to the top 6 inches of the soil and includes like final grading when you put soil back and prep it ready to be planted. That would be considered landscaping. Beneath the 6 inches, that is considered real property and excavating, as an excavator would normally think they do. So an excavator who clears land, including the brush and trees and the topsoil, a portion of that, the 6 inches and the the trees and brush on top, are going to be considered taxable landscaping. And then, so a portion of their sale would be taxable. So it falls into the landscaping bucket. And that's just specified. That's not rhyme or reason. That is made so by tax law. And then photographic and videography services, you may occasionally purchase that as a contractor if you have photographer or videographer watching your site or using that or purchasing photographs. Those are taxable services. So the main things that I wanted to pick out from here is contractors may be selling tangible personal property, may be selling services of certain leased personal property affixed to real property. They may be doing services to tangible personal property, and they may be doing landscaping. So all those items would be taxable. But let's get into, I just wanted to give the overview of the list of taxable items from DOR. So as a contractor, before we get into this, I want to talk about kind of the mindset of what you're thinking. So you have a job or a customer. You want to look at, is it residential or commercial? Because if it's commercial, you need to identify if it's building function or process function. What type of work are you doing? Are you installing or repairing? Because the tax treatment differs, install versus repair. And then is your total contract all real property, all personal property, or is it a mix of both real and personal property? And then you need to determine if more than 90% of that sale is related to real property work, or if it's not. And that also depends, changes the tax treatment. If your customer is an exempt entity, then your sale to the exempt entity is non-taxable because it's exempt, right? And then you treat everything, the real property and the personal property, as it is. There's no consider of if it's greater than 90% real or whatever. So we're going to get into more on that, but I wanted to kind of give you the roadmap of things you need to think about when you are looking at your invoices to your customers or what type of work that your business does. You want to think about residential versus commercial, install versus repair. And then are you doing all of one type of work, or are you doing a mix of real and personal? So the first question you as a contractor want to ask is a service, what are you selling? Are you selling a service or a product? So sales of taxable products and services, if you're doing a sale of personal property without installation. So maybe you sell wood out of your inventory, or sand from your sand pit, or you sell salt without spreading it. Are you selling items without installation or any service? And many contractors will sell items out of their inventory in addition, kind of as a side thing to the work that they do. So sales of tangible personal property, easy to identify. You're just selling something without installation. Of course, that's going to be taxable. Now, are you doing a service, and is that service to tangible personal property, or is it to real property? Are you providing a real property construction activity? And when I say real property construction activity, that can be install or repair. It's just service to or installation of a real property item. And then you want to also think about maybe you're doing a mix of both. And most contractors are generally doing a mix, or your invoices in total. You may be doing service to one client, say you're an HVAC or an electrician. You may on one invoice to one client be doing real property work, installing a furnace, doing general electrical wiring, and then to another client, you may be going out repairing a ballast, or you may be repairing or maintaining that furnace. So that would be a taxable personal property invoice. So when we talk about if you're doing a mix of both, are you doing a mix of both on the same job, same invoice? So let's start with defining real property. And there's 3 criteria identified for defining real property construction activity. And these criteria came from a court case, the Harvester court case in Wisconsin. And the court determined in looking at whether or not a silo really was real property. And Wisconsin was saying that no, it's not real property because a farm is a commercial property and the silo is serving like a commercial purpose. But in looking at this, the court determined based on these 3 criteria that are then used to apply, and not just in Wisconsin and other states as well, these 3 criteria are used to determine if something's real property. So the first one is tangible personal property. That would be like the bricks and the building materials of that silo. The tangible personal property is applied or adapted to the use or purpose to which the real property is devoted. So in the case of the silo, the contractor had built the silo out of materials, tangible personal property. And yes, that silo, according to the court, was adapted or used to the purpose to which the real property is devoted. It's a silo, it's used for silage, and that is used for a farm, and the silo is located on a farm. So yes, that those building materials for that silo was applied or adapted, made into a silo, which is the purpose to which the real property is devoted. So the court said, okay, that is in alignment. Is it affixed to the real property? And when we say affixed to the real property, it has to be permanently installed, whether it's bolted or it's secured to the foundation, it may be buried. Things like that are considered affixed to the real property. Yes, the silo was affixed to the real property. You couldn't just move it. So yes, it was affixed to the real property. So that's number 2. And then the third criteria is it's intended to be a permanent addition to the realty. And this is where you might see some of the exceptions. The real property has to be intended to be a permanent addition to the realty. Well, of course, a silo isn't meant to be taken down. It's not meant to be temporary. It's not going to be moved. So it was intended to be a permanent addition to the realty. And so the court said, based on these 3 things, the silos are real property. You can't consider them personal property. So this is the criteria that are used in applying to different things. And I know you're thinking, well, wait, we do work on certain things and it meets all those criteria, but it's still considered personal property or taxable. And we'll talk about some of the exceptions. But this is the underlying criteria. When we talk about real versus personal property, there is a streamlined sales tax definition that Wisconsin uses for personal property, and we're going to talk about that next. But basically, personal property is anything that's not real property. So real property is the real definition here. Examples of real property construction activities include constructing walls, ceilings, and floors. I talked about general electrical wiring and lighting. Installing central heating and air conditioning is considered real property. Installing plumbing and fixtures, and then land improvements like roads, bridges, retaining walls, patios, and sidewalks. So those are considered land improvements in real property. Remember I said landscaping is deemed taxable. Land improvements are not considered landscaping. Land improvements, again, like roads, bridges, retaining walls, patios, sidewalks, things that are affixed to the realty and intended to be permanent. So real property tax treatment, the sale of real property or a real property improvement or service to real property, your sale to the customer is not taxable. So if you're installing a bridge or installing a sidewalk, installing a road, general construction of a building, putting up the floor, the walls, the roof, that's real property and you wouldn't charge your customer tax. And again, the tax would not be on the property itself, the labor, or overhead related to that real property service you're doing. Material purchases. So the contractor is considered the consumer of any materials that go into real property. So the contractor is required to pay tax on the purchase of materials unless an exemption applies. And it doesn't matter who the end customer is. So because the contractor is the consumer of those materials, right then and there it stops it at the contractor. Just because the end customer is an exempt entity or has some other type of exemption, that doesn't change who the contractor is. So the contractor needs to qualify for the exemption in order to be considered to purchase those materials without tax. And there are certain exemptions set up for contractors for their purchase of materials going into real property. And again, the contractor is the one who needs to qualify for that exemption and meet all the criteria of that exemption on that project in order to purchase materials exempt. So just keep in mind when it's real property, you don't charge sales tax, and the contractor is the consumer. The contractor needs to meet whatever criteria to qualify for an exemption. It doesn't matter who the end customer is, and that's the starting point you should think of for real property. When a contractor is purchasing equipment and services to complete real property work, the contractor pays tax on those purchases. The purchase of tools, renting equipment, anything they need to complete their service of real property, their real property work, that is consumed by the contractor. So any suppliers, things like that, your sale of rental equipment, tools, you're selling personal property, right, without installation. Those sales are taxable unless your contractor happens to qualify for some specific exemption that exempts purchases of supplies and equipment. So, but generally the contractor is the consumer of those. So personal property, the definition of personal property or tangible personal property is property that can be seen, weighed, measured, felt, touched, or that is in any other manner perceptible to the senses and includes electricity, gas, steam, water, and pre-written computer software, regardless of how it's delivered to the purchaser. So tangible personal property, I mean, the definition is so broad, and generally we think of tangible personal property as items that you can pick up and carry away. That, as I've heard some people tell me, well, if it can be removed from the property without damaging the property, then it's considered personal property. And to an extent, that's true. But we'll talk about the exceptions where personal property can be permanently or appear to be permanently affixed to the real property and still be considered personal property. And there's a couple different exceptions for that. So what is personal property? Examples: sale of materials without installation. That's an easy one that we talked about. Easy to identify. Also still something people miss. Service to tangible personal property. And service to tangible personal property may include the bottom bullet point. There are certain items identified. It's called the list, where the item is installed. When it's installed, it's considered real property, like a furnace. But according to the tax law, for repair purposes, it retains its character as personal property. So even though it was real property when installed, for repair purposes, it's considered personal property. So there's a huge list. There's no rhyme or reason to the list. And that is why DOR created the chart. And I did attach the chart in the handouts. But Pub 207 at the back has a chart that you can review. And the whole purpose of it is it includes these items that are personal property for repair so that you can identify them. So installation of certain property that primarily serves a process function in commercial facilities is another example of an exception. So I told you that you need to identify if you're doing the work for a residential or a commercial property. And one of the things in audit that I would look for is, does the contractor serve commercial or business customers? Because according to the administrative code, there's a section about if it's a commercial property, then you have to look to whether or not it primarily, the item installed, primarily, which is more than 50% of the time, serves a process function. So if an item is installed in a commercial facility, say a bank, and you walk into a bank, you see the teller area, the stands that the tellers work at are built in. It's built into the wall. It's built into the floor. It's a counter. They have drawers. They may go back and pull out items from a cabinet. Again, a cabinet attached to the wall. These items appear to be permanently affixed to the building, but since it's a commercial facility, those items, according to the administrative code, are serving a process function, a business function. They're holding supplies for the business. They are counters for serving customers. And one of the ways we would train when we spoke to contractors is we would say, well, if another business of a totally different type moved in, would they need those items for their business? And we'd always say something like a dance studio. Say a dance studio moved in. All those counters would be removed and pulled out. They wouldn't need the cabinets because they wouldn't be storing things. So that would be considered definitely a process function. It's serving that specific business and is not really serving a general building function. It's a slippery slope and it's not really supported in law, but right now it's still being upheld in courts for this distinction between commercial and residential and whether or not it primarily serves a process function in the commercial facility. Now, don't confuse this item with the last one that we already talked about, certain things that were installed and considered real property, but then for repairs as personal property. So there's two big exceptions there. The third exception that isn't listed here is if that one that we talked about at the beginning, items installed to real property and but are leased, not permanently, considered permanently. And that's another exception that would be considered personal property. So an example would be like propane tank, and I know we're at the 30-minute mark here, but a propane tank that the propane provider leases to a customer, and that tank may be permanently attached, it may be bolted down in the backyard at a customer's residence. But since the propane company retains ownership and has the right to remove that tank if the customer switches gas providers or doesn't pay, that then identifies that remains tangible personal property. It can be removed. It's not considered permanent, and it's not considered owned by the owner of the property. And there's other situations like communication towers that are installed on spaces that are rented or leased to the owner of the tower. So an item can appear to be real property, can be permanently affixed or appear to be permanently affixed to the realty and still be considered personal property if the owner of the property is not the owner of the land it's affixed to, the realty it's affixed to. So those are three big exceptions that keeps something that would be real property maintains its characterization as personal property, and the sale would be taxable. And let's just quickly get to that. So the sale of personal property is taxable unless an exemption applies. And material purchases, anything that's physically transferred to the customer, can be purchased without tax for resale by the contractor. The contractor's purchase of equipment and services to complete personal property work are again consumed by the contractor. That's the contractor's purchases to conduct their services, to provide their services to customers. And that is not physically transferred to the customer. So the contractor is a consumer of that, pays tax on purchase of tools, equipment, and supplies, and it is not considered resale. So just because you're working on personal property or servicing personal property doesn't mean all of your purchases to conduct that service are exempt for resale. It has to be physically transferred to the customer. So I'm going to stop here today, and we'll get into the mix next week of real and personal property. And I just want to get people comfortable with these terms and understanding that there's exceptions. And I would be happy to hear if any of you have examples you want me to talk through. You can email me, you can post it in the chat right now, and I'll talk about it next week. Or just call me, email me, let me know. I'm at holly@salestaxlady.com. And then next week we will talk about a mix of real and personal and some examples and of what is real versus personal and how the tax treatment works. We'll get into exemptions another time. Let's just talk straight basic tax treatment this week and next week. So again, don't forget to purchase your tickets for the Contractor Sales Tax Conference in February. It's going to be amazing. You'll want to be there in person. We have some really great prizes. The top auction items are Bart Starr memorabilia, rare items. We also have Packer tickets, some Champion Seats tickets. Those are exclusive. You can't get them anywhere. You can't buy those. So you'll want to participate in the auction and raffles. Again, you can do auction and raffles virtual or in person. And Trust me, it's not going to be a Zoom seminar. I'd really like to see you there in person, but if you can't travel, we understand that too. So again, see you next Tuesday, 10 a.m., same place, same time, and we'll get more into personal property and real property and when there's a mixed sale, which is really a huge question for people. So thank you so much, and I will see you next week. I'm going to hang around and look for any suggestions you have on examples to go through for next week.